Welcome everyone to our e-Residency webinar. My name is Vadim Donchevski. I am a partner at Crowe DMW. We are sharing with you useful information about Estonian business and tax practices and regulations. Also, we are presenting some helpful tips how to manage your bookkeeping and avoid legal pitfalls. How to prepare books. You can hire an accountant based on the full or part-time job contracts, or you can engage freelancer or enter a contract with one-man firm for outsourcing of accounting services. When you're deciding on choosing of provider, you have to consider the following things. Fee structure. The cheapest proposals can have additional fees and poor quality of service due on overloads of clients. Freelancers and one-man firms may disappear and you will need to recover bugs. And communication and applied technologies. Data should be stored in secured services. Licenses of software should be legal. And of course, you should assess the knowledge of staff of provider. You can also keep in your books by yourself. And then you should consider that you know the regulation valid in Estonia. First of all, this is Estonian Accounting Act, which also can be read in English from the official portal. And you can choose between Estonia or international standards on financial reporting. And of course, you should consider whether you need external advisors for accounting matters or tax matters. After that, you can start with setup of your accounting system. And you should choose the software for books. In Estonia is not regulated as what kind of software you're using, but you should understand that you should be enabled to design and issue invoices that will be in compliance with Estonian Accounting Act. And you should store databases with accounting documents in that manner that provide this storing and reproducing during the 7 year. And of course, you should consider how you will exchange data with e-tax system for declaration, tax declaration, and with banks. For example, that's the same bank transactions entering in your bank in your accounting system. And chart of accountants is important because it should consider that the units and also the requirements of legislation. Then, when you set up the accounting, you will keep and report on accounting matters. It's mostly related to monthly tax declaration and annual reports for business entities. And one of option is online solution that's suggested by state-owned Estonian Center of Registers and Information Systems. This solution have some advantages and of course some disadvantages. First year of using of this solution is free of charge, and after that it will depend on the number of transactions, and it started from €5 per month. It have an integrated system which preparing the annual reports and the tax declaration. And it also enables sending and accepting of digital invoices issued in Estonia. But this system have limited functionality for analysis and data integrations. And when you're keeping this accounting even by yourself or using these outsourcing services, you should understand also some basic requirements for accounting. This company should preserve accounting source documents for 7 years, and the accounting register and documents should be preserved in machine reading formats. It's first of all PDF, Excel, text format. And if you're not keeping your books at all, you should understand that the missing of books will be considered a criminal offense. And if you're also director of the company, you will have unlimited liability for losses incurred to including state budget due to improperly kept accounting books and false or incomplete reporting during 5 years after the time of violation. Let's look on the core liabilities related to taxes. After registration of company, directors should sign up to the e-tax system to enable submitting of tax declaration. This, if you are resident, you have ID cards as an e-residence. It's quite easy. Just go into this link and enter to log into the system. If you take any employee with job contract, then employee should be registered in employees register on the first day of employment. This also component of the e-tax system. That's if you have access to e-tax system, you can register new employees. And you should remember that it's no annual corporate tax declaration in Estonia, but monthly declaration on corporate taxable income should be submitted when this arises. It means that if you have employees, you have present tax declarations monthly. If you have any type of income that should be taxed on the same month, you have also add to the same declaration named TSD, which should be presented with the first the first 10 days of the next month. If you have no employees, you have no these taxable incomes, you should not present any declaration for this particular month. And then if you see that you have taxable amounts on this month, you should deposit in advance this amount of tax before 10 days when you're presenting the tax declaration. If you're not deposited this amount and you present declaration on next month, then from the 10 days of next month, interest on tax arrears will be automatically charge it on your tax account. And some tips good to know that when you manage a company in Estonia, the accounting profit and capital gains earned by company are not taxable in Estonia. So if you have any income revenue, you keep this on bank account. You're not using this for paying dividends or any other distribution of profit. It's no income tax applicable for this amount. But you should understand that if you withdraw funds or dispose of assets from company, or company incur some expenses that may be potentially taxed by 20% income tax, in case that these transactions are not related to company business. For example, you earned money and you decided that buying a villa in Spain, or you buying a sailboat for your hobby. This will be considered as the same expenses not related to business. Will be taxed by income tax in the some manner as you divided this on dividends, and after that you buy some assets that will be used for your personal consuming. And also if you have some smaller amounts or running expenses related even to business, or part of this related to business and part of this related to personal consumptions, this also will be taxed by income tax, but it's in some cases it's also taxed by social tax of 33%. That means it will be taxed similarly to wages or salaries or of resident employees who is working in Estonia. And if you have then other entities, or you're doing transactions with owners or with directors and someday relatives, then you should consider that transfer pricing rules also should be applied. And if transactions concluded with non-market prices, right, the gap between market prices and transfer prices will be taxed by 20% of income tax. There is also, you can pay remuneration to directors, but you should consider that these remunerations will be taxable in Estonia, irrespective of where directors work and live. But if you're paying remunerations to other employees that's who are not working in Estonia, then no tax application for this kind of remunerations. And then the liabilities of directors and owners also need to be understood when you're managing this company, even remotely from other countries. The general rules that owners are responsible for company liabilities within registered share capital. In case of self-employed people, they have unlimited liability with all their personal assets. In case you're not paid share capital, You establish the company, but it's in the status with unpaid share capital. Owners will have a personal responsibility for claims against the company, but within the amount of registered share capital. So if you have minimal share capital, 2,500, then you have responsibility within this amount. And owners' liability may be increased by court resolution in case of tax evasion, fraud, or unpaid taxes. So if company not paying taxes, even this have tax obligations, and this because that just director decided not to pay taxes, or they doing any special schemes to avoid taxes, then when it's coming to court, even you have limited liabilities to share capital, it can be increased to even to director, or if owners also decided to do that, it will be proven in court. Then it can be increased their liabilities to cover all losses of that's incurred or from the activity of this company. And directors actually have unlimited personal liability for losses incurred by the company. But as I said before, this liability have timing terms 5 years from the time of violation of some law. Then in case that you are missing books, or you keep improperly accounts, then directors can be also have liability for losses of this company, but it's usually happen in case of bankruptcy. Then court will or this bankruptcy administrator can file claims against directors if for example, they are not presenting annual reports, they are not keeping account. And then thank you very much for your attention, and we will continue with another matters. Thank you.